Welcome to the MBN Solutions Boss and Data podcast. In this episode, our topic is financial education. In an era of open banking, AI and APIs, it's never been simpler to utilise financial services products to successfully manage personal and business finances. However, much of the innovation and ease of use of these tools may not be widely known, distributed or discussed beyond the realm of financial services data experts. I'm joined today by a data leader who believes passionately in deeply understanding our financial behaviours and patterns to help us maximise our financial potential. Marilena Karanika is the Head of Innovation at Experian, providing data and analytics support across different product domains such as affordability, credit risk and insurance. She has a background in credit risk modelling and loves translating data into behavioural insights that people and organisations can use to make better decisions. She's passionate about the power of financial education and collaborates with universities and professional bodies to promote a better and wider understanding of analytics in financial services, very much what we will be covering today. She's been voted Innovator of the Year 2021 in the Women in Credit Awards and has been nominated for the UK Tech Professional Award in the data category in 2024. Little disclaimer before we go any further, Marilena's views and opinions are entirely personal and she is not here to represent Experian in any way, shape or form. And with that out of the way, welcome to the show, Marilena. Kalimera!
Kalimera, Rob. How are you? Thank you for having me.
I am very well. Yeah, no, listen, it's absolutely my honour. I think two things before we go much further. The first one is Happy International Women's Day to you.
Thank you. Happy International Women's Day to everyone.
And who is the best tech support guy you've ever met?
You are, Rob. It took us about 10 minutes to get on the platform, but you sorted it out. So I think it's a combination between you and Google.
Yes, I think I'm like one of those people that you see on movies where they bring in the hacker who gets involved in all that shenanigans. That was me this morning.
It worked.
Marilena, thank you again for agreeing to join the show. You and I have been friends and collaborators now for a number of years. But for those that don't know you, could you give us a little bit of your background? Where do you come from? What do you do? What's been your journey in data so far?
Yeah, happy to. And it is indeed, every time that we do speak, we always find lots of common interests like the financial education bit. So it's good to link all these up. In terms of my background, my story, so I'm originally from Greece. I moved to Scotland, is it 15 years now? What I said was I would never go into banking. And here I am. I've done 10 years in banking and then quite a few years with Experian. I studied mathematics and then just went on into this journey of data and realized how much data is out there and how we can link it to cool and interesting things that impact our daily lives, which is what we're going to be covering today. You've covered quite a few things from my summary. I'm currently with Experian heading the innovation team. So that's essentially a great opportunity to deal with loads of different data sources, work with some very, very smart people and have an impact to people's everyday lives. And that fits quite well with the financial education for all. So that value and this discussion hopefully are going to align quite well.
Okay. And in the past, we've spoken about your work within innovation, and I know you've spoken about that kind of product focus and some of the things that you do. How has that sort of crystallised through your career? I mean, I remember you and I speaking many, many years ago when we first spoke about academic collaboration, but how has the importance of innovative products became more of a feature of your career over the last 15 years? Is that something you've been very conscious of and you've deliberately focused on?
Well, yes and no. So I think that when I was younger, when I was starting my career, I was more driven by the actual data. Like I just enjoyed going through the data, analyzing it and so on. And as I started working with data and working, like I was in a bank, then I was working loads with transactional data when I joined the startup Castlight, and then that was acquired by Experian. I started working with transactional data. So the more that I worked with banking data, credit bureau data, transactional data, so everything in your current account and your credit card, I realized how everything that I was seeing was part of people's behaviors. It wasn't just data, it wasn't just something cool to look into, but also it provided a lot of insights in terms of people's behaviors. And then that made me start thinking about my own behaviors and how they've changed over time, how they've changed when I moved countries, when I've changed jobs and so on. So that to me was a really good point of a mindset shift from a very focused on the data and the analytics and the mathematics and statistics to more of a product focus in terms of, yes, this is the data, but what can we do with that? How does it impact everyday people? How does that impact products that we're offering within large organizations to support those people? So it was it was a gradual switch that I wasn't expecting when I first started, but like it made so much more sense now.
Okay. And we've spoken obviously about home. Your own financial education, was that driven from your upbringing, driven from home? Has it been driven entirely by your career and the work that you've done? Has it been both? Has it been somewhere else? Where has this passion came from?
So I come from Greece. Greece has a very different culture, very different approach to finances. It's more, for those that don't know, it's more of a cash-heavy society. Still is in a lot of ways, but COVID changed that, accelerated that digital transformation. Obviously more heavy in terms of like state pensions rather than private pensions. So there are a lot of things that are different between Greece and the UK when I moved here. And one of the similarities is that there's not that much of a financial education within the school system. So
Right.
a lot of people rely more on what they hear, what they learn at home. They learn from the behaviors, from their immediate cycle of friends and family. So moving here, it was quite different because obviously times have changed as well in those 15 years, but you get a lot more access to more different products. You get a wider ability to deal with your finances, like the private pensions, a wide range of current accounts. So there was a lot more here. So for me, what started at home as a very conservative money approach in terms of savings is always the most important thing ever, to that wider understanding of savings is good, but it's also good to understand all the different bits of your financial profile. It's not just how much you get, how much you save. It's how much you spend, where you spend it on, and so on. So it has been a journey. It has been primarily starting at home, but very much accelerated because of my work and because of that wider understanding of the capabilities out there versus the you get your salary, you save as much as you can, and then you live your life.
Right. Okay. I think to start us on that wider piece, this is a very broad question, but why do you believe that improving, and we'll talk about UK society because this is obviously where you live, but why do you believe that improving UK society financial education is so important?
Well, it's very strongly correlated to well-being, right? Like physical, mental well-being, confidence of dealing with what life throws at you. And just to clarify right from the start, financial education is not about building wealth. It's about building this understanding and these positive behaviors and positive attitude towards finances in general that can help people have a more stable future, a more secure future. So it's not if I have good financial education, I'm going to be wealthy, and it's not if I'm earning loads, I have good financial literacy. These things are not the same. It's more about with what you have, do you understand your finances? Do you make the most out of the finances, out of the products that are out there? How are you dealing with your understanding of your personal financial behaviors, your spending, your income patterns, your budgeting capabilities, and so on, to then help build on that overall personal profile. And then that feeds into loads of things. Like, how do you deal with adverse events? Like, life happens. There's like job losses, there was COVID, there's the cost of living now. There's always something unpredictable. And there are the predictable things as well, like buying home, changing jobs, starting maybe in a different industry. So how do we, everyone, deals with those one-off situations or adverse situations in a way that it doesn't throw us off track, in a way that we have the confidence that we go, I've got this, I've got my budgeting tools, I've got my understanding of all of my different finances, I've got a plan over the next 5, 10, 15, 20 years. And I know that sounds a lot, but that's what we're aiming for. That gives me, as a person, the confidence to go, I can handle this that happened in my life today. I can handle this. I can plan for the future. Or I know that there's a bump, but I have taken reasonable steps within my spending behavior, within my income behaviors, to mitigate some of the risks that could bring me. So it gives people more confidence and more security.
I was thinking immediately there when you started expanding around things like health and the correlation that we know now between prevention and cure, and the emphasis that's now been placed on maybe like lifestyle changes and lifestyle choices, maybe on things like diet and exercise in order to prevent having to have a clinical intervention. And then I'm thinking, somebody who is managing their finances effectively, firstly, is more equipped to deal with scenarios where perhaps there is need for a clinical intervention. But perhaps before that, if somebody is able to do this properly, or if we as a society adopt a wider set of understanding around this, maybe it would have a holistic effect on things like health. Maybe that, it's just thinking broadly there.
And we know that there is a correlation. We know that there is a correlation between the financial stability, and again, I'm not talking about income and wealth. The financial stability of people with their levels of anxiety, their levels of stress, and so on. And there is a big correlation between that and potential vulnerabilities in people. So there is a cycle that the more proactive we are in addressing the aspects before something happens, the easier we make the management of it. So that's a very good example that you gave.
Yeah. Okay, well, with that in mind, how do you feel that we're doing as a society at educating ourselves around financial management best practice, about, something like open banking? How well known is it? Is enough being taught at, for example, foundational level, school, college, university? How are we doing?
So I know that there are the cynics out there and the optimists out there. I choose to be an optimist because of what we're seeing over the last few years. And I'm sure that there's more that can be done in terms of formal curriculums and formal financial education in schools. But what I'm seeing now is that there is a lot of tools out there. There's a lot of initiatives out there to educate the public in understanding data, in understanding products, in understanding the impacts to their lives. So a few examples, like 15 years ago, credit scores were more of a very complicated concept that people knew that they were affecting their credit behavior, but they didn't exactly know how. They didn't exactly feel confident that they knew how to improve their credit scores. Now there's a lot more literature around it. There's a lot more education around it. And that's one of the good things, that you have centralized pockets of articles of the organizations themselves doing a lot of the legwork to educate their consumers in terms of how can you be in a better position, how can you be in a more financial position. And then on top of that, obviously, there's a more widely available set of tools for consumers as well. So in the past, if you wanted to do budgeting, you would either have to do it like with a pen and pencil, maybe in Excel, but again, you would have to put a lot of the work yourself. Now we're moving away from that. Obviously, these are still options, but there's a lot of tools out there. There's a lot of apps, there's a lot of suggestions on how to approach it. That it doesn't feel like people start from scratch. It's not like a blank tab of Excel that they have to create the monthly expenditure and so on. There are tools out there that can help them. And the reason why that's important is, for example, we know that about 50% of consumers either underestimate or overestimate their expenditure. we're not talking about your rent and mortgage. We're not talking about like very big expenses. We're talking about how much do they spend on the grocery stores in the last 3 months? How much do they spend on takeaway or eating out? How much do they spend on fuel? And if you keep adding those understatements or overstatements over time and across different categories of spend, that's a lot of money that's unaccounted for, that you cannot budget for, that you cannot plan where it's best to go. So the more that you have an understanding of that, and the more that you have an understanding of the tools that are available, the more that makes you capable to make longer term decisions and also plan for the future.
And back to that point around, and I acknowledge recently there was a move to introduce some element of financial education into schools, and I think the bill was defeated, and it's not the first time that the bill has been defeated. I've always passionately believed that both financial education and first aid should be taught at school continually throughout school, introduced very young and then, increased all the way through school. Do you feel, as an expert in this domain, how does it, well, I think I'll rephrase the question, how does it make you feel as an expert in this domain that bill has been defeated?
So I'm going to start with saying that I didn't go to school here, so I don't know what the benchmark is, but what I do know is that both in my previous role and in my current role, we do go out to schools. I know a lot of my colleagues from my wider work family, their companies have similar initiatives. I know that like the Scottish AI Alliance has an open course to the public for educating them in terms of financial education, AI in banking, finance, and in other areas. So I think obviously it's very good to have things established within the curriculum, but there's a lot of effort from organizations, from public bodies, from charities, from a lot of organizations that even though they might be more private initiatives, they do have a lot of impact to those, like to the younger generation that then is going to go on and feel more confident with money. There's more books out there. There's more conferences, seminars that people can attend for free. There's things in youth centers and social clubs. So again, you can choose to take the cynical view or the optimistic view. But like for me, regardless of who's running those initiatives, there are more of those initiatives now than there were in the past. There were more tools now that they were in the past, which makes me feel happier and more confident for the future of the next generations.
I get you. Now, you have spoken about some of those tools that are available to help individuals and how open banking has made the difference. Can you give us an overview of the different areas that these tools might help with? So, for example, saving or budgeting or management. What's the broad overview?
Loads. Pretty much for everything that you can think of. There are tools, there are resources. So from account switching, right? Like how easy it is to switch your current account from one bank to the next. That's been simplified loads in the last few years. And it was quite interesting to see that in the beginning, the public was very reluctant to make the most of that initiative. Like we were seeing switching rates around like 7%, which is quite low. Like people would stick with their current account, regardless of the cashback, regardless of everything else, interest rates, you name it. We would see that reluctancy. And I think a lot of that is very connected with financial education. What we're seeing now, I think the latest percentage was from 2022. There was a 26% increase in account switching compared to 2021. So again, there are some things that are slower to be adopted by the wider public, but with them being rolled out, with them being available, the opportunity is there. So it's just a matter of time before the public catches up with them. And then the more that the organizations themselves do some of that legwork and go, and I know that from one of my accounts, they actively have to email me to say, you know what, you're earning less cashback versus what you're paying for this account. Perhaps this is not the right account for you. So there's a lot of focus more centrally in doing what's right for the customer, like Consumer Duty has been rolled out. And there's a lot of focus on how can we treat consumers fairly? How can we help them navigate the system? How can we simplify the language that is being used?
Yeah.
And if you see in your bank, like, I don't know which bank you're primarily using, but a lot of them have rolled out features to understand income and expenditure.
Yes.
They have loads of them have rolled out a more simplified process for getting different products, for verifying your ID, for changing specific things in your account, for creating saving accounts, pods. You call them, different banks call them differently. But there's a lot of work that's being done across the board using data, because like organizations have loads of data to go, let's prioritize this. This is important to consumers. Let's give them the power to understand more about their behaviors and do things better. There are things like putting, like asking your bank to not allow you to gamble or shop after a certain time in the day. So there are a lot of controls that now give more power to the individuals to go, you know what, I know that when I scroll at 2 a.m. in the morning, I tend to buy things that I don't really need. I feel that I need them at 2 a.m., but like I really don't. So there's a lot of data-driven options that for the organizations, they prioritize these features and went, yeah, that's an option for you now. It's there if you want to use it. If you don't want to use it, that's fine. And that makes it a better experience for everyone. It makes it more inclusive across the board and helps people with managing their finances.
It wouldn't be a discussion of this nature without including the magic word AI, which is on everybody's lips at the moment. You work in innovation, and AI is that phrase on everyone's lips at the moment. How do you think AI will impact product development in this space?
So it's already started impacting it, and that's why like a lot of the features that I've talked about, a lot of the categorization capabilities, a lot of the insights that you see in the apps in terms of this is how much you spend compared to the average Rob. This is how much you spend.
The average Rob.
And so all of these things, the more personalized messages, the more tailored to different segments, products, and services, they're mostly powered by ML and AI. You can't have someone doing that legwork for you. You do need these techniques to scale it up for the wider public. So everything that's personalized, from the way that things are presented to you in an app, from the way that the updates are curated for you compared to me, because that's also AI and ML powered, the way that you do transaction categorization, the way that we do fraud prevention. All of these things are AI powered. So it's not necessarily something that looks very fancy and cool, like Minority Report, that you just drag and drop things here and there. It's just that it takes a lot of the effort away from organizations to roll out these solutions to the public. And that's why these tools are more affordable than before, and that's why they're more inclusive than before. So there's a lot of work that's been done in the background from data scientists and engineers and so on to make financial services and products better and more personalized.
And I think we could hopefully tag this into the AI good news column, in that the work that AI has been doing behind the scenes within the products that you're mentioning are making them more widely available to a wider and more diverse audience. So it's rather than the doom and gloom around AI, we could look at something like the use cases from financial services and just say, look, this is AI being used for good, because without that power behind the scenes, to your point, we wouldn't get that personalization and we certainly wouldn't get that widespread of different products. There was a point that you made earlier that I actually wanted to draw upon, just around that product innovation and use of AI. Just looking at something like credit scoring, and it's almost as if it's became partly gamified, where, it's like, do this and the little needle will go around and you're a winner and you've got 5 stars and all this kind of good stuff. And I just wonder whether or not you can see that kind of thing, that gamification or making things more interactive, becoming even more widespread across a different range of innovative products for this.
Yeah, and it's getting rolled out more widely because it works. It gets people,
and it's fun.
It gets people engaged. So if by taking in on your finances once a week gets you cookie points on an app, but then it makes you think about, like answering the questions to the quiz of how much did you spend on Domino's in the last 3 months, and then you get it right, and then you get some points. I'm all for that. That's just a fun way to do to do financial education. It doesn't have to be boring. It doesn't have to be Excel. It doesn't have to be something that people dread to do. It can just be, oh, you know what? This month I've spent less than last March or more. Why is that? What did I do differently? Can I guess? And if I can't guess, can I see it in the app? And then that can help me plan for my April or May and so on. So it's, for me, it's becoming more popular because it's working. And that's not necessarily a bad thing, because it gets a wide range of people interested in joining these discussions. It's not just the people that work in the banking sector. It's not just the people that love to talk about data, regardless of the context. It is everyone understanding the impacts of, my behaviors, my credit score, or my likelihood to fall victim of a fraud scam. And so, if you understand that, and if you have a quiz that goes, someone calls you and asks you for your PIN, these things, they sound fun, but they have an impact. And the more and more you get these messages, the more aware you are of it. That's the way to reduce scams. That's the way to reduce fraud, by having this constant reminder in people's heads that this is how it can be done. This is how it can be done. Be mindful. And you can only do that in a fun setting rather than a I told you so setting.
You've spoken about fun and the optimism and the positivity, but are there any risks associated with using tools or products for financial education? Is there anything that we should be aware of in the negative column?
Yeah, yes, there's, and again, that's part of the financial education bit, just being aware of how to use the tools, rather than blindly using whatever someone throws your way. So there are risks. There are risks around asking ChatGPT on where you should invest, or these tools should be used more for understanding the different options, simplifying some things, sense checking, understanding, rather than taking financial advice from. That's why we have certified people. That's why we have people that are accountable for the advice that they give you, versus, it's give me a summary of this, or just give me a list of these products. So there is a balance, and that fits very well into the education bit of, yes, there are tools, but it's very important to understand who created that tool, what the purpose of that tool is, what are the controls around it, and what's the accountability around it. If you go to a financial advisor, they are accountable for the suggestions that they give you. If you go to a doctor, they are accountable for the suggestions that they give you. If you ask ChatGPT about it, there is not the same level of accountability. So it could be great for, getting some ideas for a travel destination. But there is a balance. So there's a balance of why you would use some things versus others. And there's a place and time to understand where you should be using everything.
And the follow-up question to that, looking broadly at society, and this is something that I'm very interested in, because I've noticed it myself in my own life, with an ageing population, and the fact that so many of our population now are not digital native, and perhaps struggle with adoption around innovative tech products. Do you think that might prove a challenge in the adoption of these wide-ranging tools and solutions that are out there?
So that's a very good and valid point. And I think that's something to keep in mind, that it's not about putting everyone on the same journey, and it's not about giving everyone exactly the same tool or solution. It's more about personalizing it, as I said before. So it's more about you have people that might not enjoy going into the bank branch to do business, and they might prefer doing that over the app. And you might have people that feel more comfortable having a human going through the different things and explaining them to you. So instead of having 100 people to go to a branch, which puts a lot of strain on the resources there, it's better to go, here are both avenues, pick which is best for you, because that frees up some of the human resource for the bank branch for people that prefer that. And that's just an example. And then have the other ones get a different type of experience via an app. They still get to the same outcome, the same service or product that they might need, but in a different way. But also, because you start realizing that there is so much of a range in your customers and your consumers, you start thinking more diversely about the products that you're offering, how you're explaining that. And then that understanding and that being more in the forefront compared to what it was 15 years ago and even 30 years ago, that makes it more accessible to a wider range of people. So that's the first bit in terms of, ideally, it's not about taking options away from people. It's adding options for people that might prefer a different, more digital journey, more automated journey. The second bit is about that diversity, and we've seen that more now. There are more diverse teams within product development. And for all the products that are doing well, it's that diversity that is driving the better understanding of the market. And then that makes the product more popular with a wider base of people. Right. So it's not about, you're X, Y, and Z, that's more difficult for you to use it. It's, if you're X, Y, and Z, here's a product that's tailored more to the way that you prefer to interact with things. If you're a very different customer segment, here's a very similar product, but potentially different user interface. So I still see that as an opportunity. It is a risk as well if we are not mindful. But what I've seen is that we are generally more mindful about it, that there are people with different skills, different interests, different levels of capability to interact with mobile banking or apps or anything that might be more digital. And then the last thing to add here is that there's a lot of work that's being done in terms of supporting the different segments. Like, I have a community center right around the corner, and every Tuesday they have sessions for people that might not be as tech savvy, that you can just pop in for free and get some support. And again, there is a balance, because a lot of these initiatives are not widely rolled out, but that's been thought of in a lot of different pockets. So for me, the steps forward are more about inclusivity rather than not. It's around having those features that allow you to do better with your finances. And I've said the examples of like gambling and online shopping late at night that help you, knowing yourself, to go, you know what, I could benefit from this additional feature. I could benefit from this control.
No, it's a great point. I just have that almost fear of some people being left behind. But as you rightly say, what it is tending to do is it's allowing segments of the population to access information in the way that best suits them. It's that personalised model again. It's back to that the individual's choice. And if we have got different avenues that people can go down, then they'll choose the one that's most appropriate for them. I'm just looking at the time here, and I'm like, I can't believe we've been talking for nearly 35 minutes. But we are now at the kind of final bit, and the final bit is always a couple of questions. One of them asks you to do a little bit of forward gazing, I think is the best way of putting it, and then the other one's asking you to do a little bit of looking back in time. So I think if we look at the journey that we've all been on over the last sort of 10 years or so, what do you think we will, as a society, where we will be as a society in 10 years from now with regards to the areas we've been discussing, that financial education, the adoption of use of disruptive technology? 10 years from now, where are we? We better? We worse? What do you think?
I mean, we're talking about adoption, so that's more
Yeah.
around like people understanding more and more about it. So I think exactly what, as we've said, with like account switching, the same happens with open banking, the same happens with the use of online banking. Like usually adoption goes up, and it has to do with like that innovation curve that once you get a critical mass of people understanding and using something, it's easier to bring more people on board at that point. So if you're in the earliest 5%, you're more of a pioneer. Not everyone understands what you're talking about. Once you reach that like 25% of people using something, they advocate to their friends, their families about the same thing, and then that accelerates adoption. So it's in a lot of cases, it's about getting to that critical mass of people having used something and having seen the value of something, because once that's done, then it pretty much rolls out to everyone else because of that word of mouth, that easier access to information and so on. So I think
Yeah.
in terms of adoption, it's going to go up, both in terms of using different data, using more digital avenues, using different types of tools and apps that are available and will continue to be made available and improve and enhanced over time. And then all of these new tools, I reckon, are going to be easier to access and more inclusive. Like from what I'm seeing now, there's a lot of effort going into that space to cater for a wider range of people, skills, interests, capabilities, and so on. So I think that's also going to accelerate adoption.
Okay. Final thoughts.
Uh-huh.
So, if you could jump in the Wayback Machine and speak to yourself 5 or even 10 years ago, what advice on the subject of financial education, based on what you know now, would you give to that younger version of yourself?
Oh, so many things. So many things. I think the top one or two would be, first of all, that like doing something is much better than doing nothing. So even taking 2 hours every year to just review finances, just understand like all the different accounts that someone has, understanding what the pension spot that they have are and who they are with, like remembering the login detail, like the small thing. Like you're laughing, but it's true. Like
It's true.
it's quite impressive how many pension pots get forgotten about because people stayed in a job for like just a year, and then they have like 8 or 9 pension pots and they forget one of them. Like it's something that you don't think because it's like 30 years in the future, but then it's not. So,
It's not. I agree.
so
Yeah.
it like spending 1 to 5 hours, it doesn't matter, it depends on everyone's circumstances and personality, going through the finances and going, I've got this account, am I happy with the interest rate, am I happy with the cashback, is there something better, should I switch, I've got these saving accounts, do I need to consolidate, again, what's the value of X, Y, and Z, I've got this expenditure within the year, is that in line with what I was expecting? How do I think I did compared to what I see that the data tells me that I've done? What do I want to do differently in the next year? So taking that time to review, even though it sounds like a drag on that day, I realize that I think that it helped massively in terms of the overall understanding of my behaviors as well. Like I book tickets to go abroad way too late. Is a fair point of what I've seen when I was doing these reviews. So just being mindful of that, it can help you save money in the future, but it can also start helping you get some better habits in place. And the other thing that I would say, and it sounds odd coming from someone who's worked in a bank for quite a while, is that sometimes, abbreviations and the naming of things sounds quite scary. So
Right.
I would encourage myself back then to start earlier and just go, yeah, that sounds like a very weird concept, but let me spend 15 minutes reading about it. Is it like, what's ELISA? What's an ISA? What's just to understand what's out there. You don't have to necessarily do all the cool things, but again, doing a little bit of something, it's better than just going, oh, that's too scary, I'm not even gonna read an article about it, because that can help overall with an understanding of what's out there. So spending time to review the finances, using the right tools rather than doing everything manually, and then just again, because something sounds scary doesn't necessarily mean that it is scary. So again, allocate some time to that.
An amazing note to finish things on. Marilena, thank you. Thank you so much again for taking the time to speak with me today. Thanks for sharing your passion, your knowledge, and your expertise in the theme of financial education in the era of open banking and AI. I hope you, dear listener, have enjoyed the conversation as much as I have. And if you have, please take a moment to review the show on your podcast or video platform of choice, giving us 5 stars, obviously, and share this episode with anyone you feel would benefit from a view or listen. Thanks. Please do look out for the other episodes in this podcast series where I'm joined by other special guests discussing topics relevant to today's bosses and data. Visit www.mbnsolutions.com for resources like our UK Data Salary Survey, to watch recordings of our latest data meetup events, or to download our white papers, research and thought leadership. Follow us on LinkedIn, Instagram and Twitter for the latest news, views and opinions, and of course, hottest opportunities in the data space. Goodbye.